Now, some investors may have soured on treasuries, but we're seeing plenty of investors piling into the high-yield bond market. Fresh data on fund flows confirms that trend, and our John Ehrlichman has been picking through the data, is back now with that story.
Yeah, that's right, Scarlett. A.M.G tracks what we're seeing in the sector, and over the past week, fund flows to that high-yield space up more than $450 million. This is the 13th week in a row that we've seen that number moving higher, and since March, we've actually seen fund flows up in the neighborhood of $7 billion. Pretty impressive since the middle of March. Performance out of this space, as you might expect, has been impressive. In the neighborhood of 25% in the second quarter. Compare that to around 5% in the first quarter. We were speaking with Ray Kennedy, who's a manager in the high-yield space, and he says it has largely been a liquidity-driven rally. The lowest quality names seeing the most buying activity, and a great example of that comes from the casino space. Let me show you what I'm talking about on the touchscreen right here. This is an example of a Harrah's bond issue, which was trading at less than 5 cents on the dollar at the March lows on liquidity concerns. Well, since then, you can see this arrow pointing right up, more than 800% in terms of the return for investors, and now these bonds trading at around 40 cents on the dollar. Now, Ray Kennedy says, at this stage, you have to start thinking about the fundamentals. What's the summer season like for casino operators? All of those normal things you'd think about when you're looking at these particular issues. While that would be a concern, when you look at this continued flow of money into the high-yield space, it would suggest that people who are late to the party continue to come in, and that could continue to mean some momentum for these high-yield plays overall. Scarlett?
John Ehrlichman talking about corporate bonds.